Why would you not do that? Why would you not want to verify the documents that an underwriter is going to be asking for up front? Like, well, Jay, like so-and-so lender didn't ask me for all this stuff, and they get pissed off at me. Y'all, that is a recipe for disaster. Some of the biggest mortgage disasters I've seen is when buyers thought they were pre-approved when in reality they were just pre-qualified. So today we're going to go over exactly what the difference between pre-approval and pre-qualified means, because it's very, very important. So a lot of buyers that apply online think they're further along in the process than they actually are. They hear, hey, you're good to go from a lender and think that they're actually good to go. When in reality, the lender has just done a half-assed job, to be completely frank with you, on the job of pre-approving somebody to make sure that they're good to go. So on a pre-qualification, it is exactly that. It's just a first glance. It's a first look at a borrower if they're trying to purchase something or if they're trying to refinance. And a lot of times it's just their stated income. It's just their stated assets. Hey, I have $5,000 in the bank. Hey, I make $100,000 a year. I'm just telling you and I'm putting it on the application, but nobody is actually verifying that information. Okay, stated credit score, which is crazy. Like, you would pre-approve somebody or pre-qualify somebody without actually verifying their credit. So a pre-qualification is just a first glance of what you're qualified to purchase, but it's not actually verified. So in a pre-approval, this is when the information has been verified. I like to do a full pre-approval up front because I'm going to ask for this exact same documents that an underwriter is asking for, because why would you not do that? Why would you not want to verify the documents that an underwriter is going to be asking for up front to make sure you're not going to get into trouble? So we're going to verify your income. We're going to be looking at pay stubs, W-2s. If you're self-employed, we're going to be looking at tax returns or K-1s or 1120s. We're going to be looking at your financial statements. This is a big one, your assets. Now, we don't have to look at every single financial asset account that you have, but the ones that we're going to be using for your closing cost or your down payment, or if you need reserves in a certain situation, we're going to be checking out those accounts. We're going to be looking at the last 60 days of those statements. We're going to be pulling your credit to make sure there's nothing derogatory on there, or there's something like if you own multiple real estate and you have multiple mortgages, we need to verify all of this information. We're going to be running it through a thing called AUS, Automated Underwriting System. This is what the underwriters use. We want to be as thorough as possible when you're purchasing something, presumably the largest purchase of your life. We want to do a thorough job up front and not just half-ass it like a lot of the online lenders do. I get it all the time. Like, well, Jay, like so-and-so lender didn't ask me for all this stuff, and they get pissed off at me. They actually get mad at me and frustrated with me and threaten to I'm just gonna go over to this other lender because they're giving me what I want. Y'all, that is a recipe for disaster. Now, I can't speak for all the other lenders out there. I can only speak for the ones like myself that are doing a thorough job up front with all the documentation. So why does all this matter? Well, when you go under contract, when you purchase a home, the time is ticking, right? You are now contractually obligated to meet certain milestones and close on the home and give the seller their money, right? And so you have earnest money at stake, which is often thousands and thousands of dollars. You maybe have option money at stake, if you live in a state where you can have an option period. And more importantly, like if you're working with realtors and their reputation, right? That they've gone to the sellers and say, hey, I got strong buyers, we're verified, we have all these things. Their reputation, their livelihood is on the line because this is how they make their living. And then also, if you've ever sold a property, which I have multiple times, it's a very emotional event. And you're just trying to find the perfect buyers because you're in love with your house and you want to make sure it's going to the right family. And if something happens during that process and the deal falls through, and now you have to go back on the market and you wasted all this time and energy, and if you've ever been through this, you know exactly the feeling that I'm talking about. And so this is why this matters up front. You're literally dealing with people's livelihoods because maybe the sellers are selling their house, but it's contingent on selling that house because they're purchasing another house because their job is moving them to another state and they're already stressed about that and they're just trying to move their family and they have kids and they're trying to put them into a new school system. If you've been in this situation, you know exactly what I'm talking about. That's why it's so important for the lender to do their job up front and verify all the key pieces of information that we know is coming. We know it's coming. I mean, unless you've been a loan officer for 1 day or 1 week or something, and you've never actually been through this process, but if you're experienced and you do this day in and day out, you know what is coming a week from now, 2 weeks from now, 3 weeks from now through the underwriting process, so you want to get ahead of it. So some of the common issues that I see, especially around income, is the income wasn't properly documented and calculated up front. Now, if you're a W-2 and you get paid every 2 weeks or something, that's pretty easy. But if variable income, we're not talking about variable income, commissions, bonuses, overtime, anything that's variable, there's a whole nother set of guidelines on how to properly qualify that income. That's commonly missed. Credit not being properly reviewed. Late payments, especially in the last 12 months, is a big deal when you're trying to qualify for a mortgage. So this needs to be looked at. Anything that's derogatory, bankruptcies, any of that needs to be looked at, because there's, depending on if you're going conventional or FHA or VA, there's all these different mortgage types. They all have different guidelines. And speaking of VA, one that I see all the time, not all the time, but it does happen. So we have a thing called CABRs, which is basically looking to see if you're in default on any government loans, like SBA loans. That may not show up on your personal credit report. So you need to check that up front, because if you're a veteran and you're trying to get a VA loan and you're in default on an SBA loan or any type of government loan, we can't insure the VA loan. So you're dead in the water in underwriting unless you get that resolved. So I see that a lot. Occupancy is another thing. That's actually the number one fraud in mortgage, is occupancy fraud, whether you're buying a primary home or a second home or an investment property. Sad to say, people will lie on their application and trying to make it seem like it's a primary home, because primary homes have better interest rates than in like investment properties, when in reality, it's going to be a rental property or investment property all along. Like the lender there's certain ways that we can figure out like what's going on. So these are common things that get missed during the upfront pre-approval process. For the realtors that are watching this, these are questions that you should be asking the buyer's lender. If you're working with as a buyer's agent, or heck, even if you're the selling agent or the listing agent, call up the lender, email the lender and ask them, hey, have you properly reviewed the documents? Have you looked at income? Have you pulled credit? Have you ran AUS, right? Like, you want to get my attention as a lender is when a realtor starts talking some of the more technical stuff. I'm like, wait a minute, how does he know about AUS? How does she know about AUS? Like, that's going to keep us on our toes and let us know, like, wow, they are for real, right? And I want to work with the partners that take it this serious and know their craft and are experts and know exactly what's coming. You know, a lot of the realtors that I work with that have been around for a while, dude, they know. They're probably they probably know more of the guidelines than some of the new loan officers. So these are questions as a realtor that you should be asking. And if you're a buyer, right? If you're trying to buy, ask your loan officer, right? Make sure that they're doing their job. Even if you know you've provided some of this documentation, ask them, hey, what's my debt to income ratio, right? What's my DTI? You'll hear that thrown around a little bit. If you're on a VA loan, if you really want to make sure you're working with a lender or a loan officer that knows what they're doing on a VA loan, ask them, hey, are we passing VA residual income calculations? Because VA loans are not actually DTI qualifying, they're residual income qualifying, which is a fancy way of saying basically how much money do you have at the end of the month after you're paying all your bills. The VA has a certain calculation that we have to follow. So ask them, how am I looking on VA residual income calcs? Man, if a buyer asks me that, like, I know I'm working with somebody that's serious and has done their homework, and like, this is gonna be a good transaction. All right, to wrap this up, so in summary, a good loan officer is going to verify all this information up front. Look, I get it. You get pressured on the phone or in the email, like, dude, we're trying to make an offer. This is competitive, like, yada, yada. I get it, but I'm not going to take shortcuts. I'm not going to half-ass my job just to give you a piece of paper that literally is not worth anything. And no, I feel bad for the people that they get that piece of paper and they think they're gold, right? I get it all the time from buyers that are like, well, so-and-so already pre-approved me at up to 700,000. And I'm looking at their file. I'm like, 400,000 is going to be a stretch. I have no idea why they and then they get mad at me because I'm telling them something that they don't want to hear. But in reality, I'm trying to do them right. I'm not trying to set them up for disaster. So do not work with lenders that don't verify your actual information. If they just say, hey, here's your pre-approval letter, and you have not provided any documentation to support that, it's a red flag. If you want to work together, if you want to get started on an actual pre-approval, there'll be links in the comments below. follow that, and me and my team will be able to work with you.